All right, for his take on the global markets and everything in between, Pete McGuire joining us from XM. Pete, a very good morning to you. I hope you had a relatively calm weekend, given what we experienced last week, of course, unless you're in the crypto market. But even that was somewhat calm. So what are we looking for this week? Lots of data on the plate, particularly as far as jobs. And, in Australia, we've got jobs and wages at the same time.
Absolutely. Good morning, Andrew. Yeah, there's an avalanche of data coming out this week. So I think from where Australia sits, I'm not looking for any real surprises. I'm looking at the currency being hammered down and, that 69.30 handle. So all of those, I think, inputs, we've got a lot of different countries reporting, as we mentioned, and the impact to the US dollar. So everyone's keeping a very close eye on that and whether US equities are going to see an uplift after Friday night's strong result.
Yeah, we look at that strength of the US dollar, obviously, as investors, look for that safe haven with rates and inflation continuing to rise. And as a result, we say, as you said there, the Aussie dollar suffering. Gold also, that was down around 4% last week.
Absolutely, just over 18.8 at the moment, or $1,808 an ounce. Silver's been hammered down as well, Andrew. So, yeah, a lot of profit taking on those. The exhausted to the upside, they got spanked down. And I think that US dollar will probably trend higher. Gold, I wouldn't be surprised to, have another leg up. It's whipsaws between that 1,800 and 2,000. So when you get into the groove, it's like, if you get the music right, everything looks pretty damn good. And so I think at the moment, there's a point of consolidation, and then it'll be off again to, edge up higher. We have to put our mind back 20 years to really, September 11 and that US dollar hitting 105, 108, 110 US dollar index. So it doesn't happen every day.
But Pete, what's it going to take for gold to break out of that range, do you think?
I think the US dollar, the inflection point, Andrew, what happens as far as equities, they're well back. What the Fed does and what central banks do globally, if they do take the foot off the throttle come fourth quarter, if you're looking at recessionary fears or actual recession in play. So I think that would really push gold higher then. So that's where we all sit. Plenty of analysts are saying it's 22, 23, 2,400 Cape, and it'll be there by this time next year. So just hold on to your hat. I think there's plenty of good times ahead of us yet.
All right, okay. Just staying with Australia for the moment, of course, big week. It is election week. Can we expect much movement, particularly as far as the dollar is concerned, depending on the outcome?
Well, I won't be surprised to see a surprise come Saturday evening, so I'll just put that out there. I think what you'll see as far as the Aussie dollar, probably a continuation as far as softness, probably a 68.50 handle between now and Friday. I can't really put my mind too far further out because have a look what it's experienced over the last couple of weeks. Nothing short of surprising. And many analysts, again, are saying, is it a 63, 64 handle if the situation in China doesn't resolve itself with the severe lockdown. So here's where we sit. And that big lot of data coming out, you've got China, you've got Japan, you've got the retail sales, UK, US and China. So I'm keeping a very close eye on those big data points and what impact it has to the Aussie.
Yeah, of course, you mentioned China there, Pete, and the fact that it's still weighing on the Aussie dollar because of those COVID lockdowns. However, we are getting news that perhaps they're looking to ease that, particularly in Shanghai. What are you seeing there? And also with the Chinese data we're going to get this week?
Well, that's right, Andrew. Hopefully they do from a humanitarian side. They don't roll it across, and it doesn't look like it's going to start taking on board Beijing and other big capital cities. So if they take the heat out of it a little bit and open up the economy, then that's going to be good for naturally retail sales, for industrial output and a couple of other things moving forward, and GDP. So there's the story there. Everyone's got a key focus on it, and we just want to see what the Chinese government are prepared to do over the next matter of days and weeks. Keep an eye on the Aussie. The Aussie's a proxy, and I still think it's going to be a bit further downdraft, Andrew, for that Aussie US.
All right. Meanwhile, I've got a bit of data coming out of the UK. How are you seeing that at the moment, particularly the performance of the pound?
Yeah, well, the pound 122. Have a look at it, 122.62. you only a little while back we were saying it's 132. So you're looking at that 120 handle. It's really narrowing it down. What's going on as far as retail sales? What's going on with the general economy over there? Third quarter, are we going to see those, big recessionary fears moving forward? Everyone's keeping an eye on the numbers, how they drop, and that further weakness. So I'm really looking at, further continual weakness as far as pound and euro, and the US dollar is just, king dollar, Andrew. That's where everyone's keeping a very close eye on and making, incredible trading profits over the last matter of months.
Yeah, well, we've gone full circle. Let's end there, Pete, just as far as the US is concerned, because we're getting constant commentary from Fed members at the moment. Most recently with a couple reiterating the point that the next two moves are likely to be 50 basis points. Of course, investors worry that it may be more than that. How's that impacting markets at the moment, particularly as far as those bond yields are concerned?
Well, look, Andrew, I think it's going to be two lots of 50. That's where everyone's got their mind on who's, if we see a surprise, I think it's that 75. I'm pretty much sure that it won't happen, but who's to say? As far as bond yields, keep an eye on what the overall numbers coming out of the States as far as inflation, how they're moving forward. Inflationary fears globally are really ratcheting up. So, the Fed's got its hands full how it manages that, and as far as growth expectations. Look at the NASDAQ, have a look at the equity markets, how heavily they're sold off, and they realise the hurt on Main Street at the moment as far as investments and naturally equity markets.